Welcome to Senior Services Society Fridays with Seniors on the Peter Legge Podcast. This podcast is brought to you by Coast Capital Savings Credit Union. Hi, everyone. Welcome to Fridays with Seniors on the Peter Legge Podcast. I'm Cherry Hineta Elon, and I'm excited to fill in for Peter today. We have an amazing episode lined up for you, and Peter usually guides us through some insightful conversations, and I'll do my best to carry on. Today, we'll be diving into finances and taxation. And to help us do that, I'm thrilled to welcome our guest, Isaac Vineman, an associate financial planner of Coast Capital Savings Credit Union. Hi, Isaac. Welcome to Fridays with Seniors.
Hey, good morning. Thank you so much for having me.
We also have with us Kelly Latzel, a volunteer of Senior Services Society of BC. Hi, Kelly.
Hi, Sherry. Thanks for having me.
Thank you for joining us today. Isaac, please tell us more about yourself.
Yeah, for sure. So as you said, my name is Isaac Wieneman. I'm an associate financial planner here with Coast Capital Savings. I've been with Coast for coming up on 5 years now, and I've been in this role for 3. And in my role here, I work based out of Chilliwack, which you probably can't tell from my Zoom window, but broadcasting live from Chilliwack here. I work on our Cottonwood Wealth Management team. So that is myself, our senior advisor, and then we have an administrative associate as well. And so we help manage clients specifically with their retirement plans and estate plans. And we partner with people, get to know them, and help them get to where they want to get to.
And how about you, Kelly? Please tell us about yourself.
So I'm Kelly Latzel, and I run an independent consulting firm, KLG Consulting, a CPA, and I volunteer with the Seniors Services Center Society, which actually helps seniors in the New Westminster area. We also, specifically for where I volunteer, is in the tax center, so helping seniors fulfill their tax, and we help them with other forms as well, like their CPP and their OAS applications and anything else that they would need sort of financial assistance with.
So let's dive into it. Isaac, if a client has some money to invest, what type of products or services are available for them?
Great question. And you're going to hear me say it a lot. It depends because it definitely depends on the individual client circumstances and what they're trying to accomplish. So I'll give you sort of the brief overview. The way that I describe the different financial tools or services that are available to people is like tools in a toolbox. And so there's no bad tools. There's just the tools that accomplish different jobs and different tasks. So when we're talking about the different tools, we have, of course, your basic checking and high rate savings accounts. We have things like term deposits or guaranteed investment certificates where your money is locked in for a specific amount of time. We also have market investments, so whether it's mutual funds or ETFs, exchange traded funds. And so the right tool depends on what job someone is trying to accomplish. And so that's honestly the main thing that we spend time doing as financial planners is really just trying to understand what is the job that needs to be accomplished by really getting to know the client and understanding their individual circumstances. And the main thing that we're looking for is, when do you need the money? Right? When is this goal going to be accomplished? Is it something that's happening really soon? Is it sort of further in the distance, or is it way into the future? And that is going to be the main driver of what is the right tool for the job.
Okay, but generally for seniors, what is the common goal for their finances?
Yeah, that's a great question. So there's usually a few. There's first and foremost, it's they want to make sure that they're going to be okay and that their needs are going to be met today, tomorrow, and throughout the rest of retirement. So let's assume that I'm speaking with someone and they've recently retired, or maybe they've been retired for a little while. Their number one concern is making sure that they have money to put gas in the car, food on the table, that they can be comfortable and not have to stress about money. And so to do that, there's a few things that are important to do. You want to make sure that you have a good emergency fund, right? You want to have your emergency fund in something like a high interest savings account. That way you have access to cash if you need it. And then usually there's some money set aside that they're not going to spend in the near future, and they want to use that to supplement their retirement income. and sort of have a better quality of life, or have more access to funds in any given month than they otherwise would. And so that's where something like a longer term mutual fund investment, for example, maybe they have RSPs that have converted into a RIF, for example. That's where something like that may come into play, where they're generating that additional monthly income to support their lifestyle.
Yeah. And that's when your services come in. You give them the right advice on what to do and when to touch their money or so.
Exactly, exactly. That's a main one of the main things or main questions that people often have is, okay, I've had this RSP, and I've been contributing to it for 40 years, ever since I started working, and then one day I'm just supposed to start using this money. Um, what does that look like? How do I take it? How much do I take? What is the tax impacts? What do I do if I take more than I actually need? Because RIFs, for example, have a minimum. So there's a minimum that seniors will have to take from their RIF, their registered income fund. And so in a lot of cases, they might say, hey, I actually don't want to spend this money. I don't need all this money. So now what do I do with it? What other tools are available for me? But yeah, you're exactly right. It's something that we spend a lot of time talking about, for sure.
Yes. And so, what about if there are clients who do not have enough money, who fall under the threshold of having a financial planner? What are the options for them?
That's a good question. Can you maybe specify a little bit more? Maybe give me an example.
Yeah, like for example, they don't, is it, are there instances when a client doesn't have enough money to qualify for traditional financial planning services? What
Okay.
alternatives do we have for them?
Yeah, okay, I see where you're coming from. So the way we do things at Coast, and I think every institution is a little bit different, but they probably have something kind of similar to this, is we base it on sort of the complexity and the services that the client needs. Now that does tend to go hand in hand with dollar value, but not always. I mean, I have done some financial planning for seniors that are on the lower income side of things, and that can still be fairly complex when you're looking at things like guaranteed income supplement and dealing with clawbacks and that kind of thing. So money doesn't always equal complexity, although it does tend to in this industry. But generally, we sort of get involved around the, say, 3 to 400,000 in investable assets. That's where we really kind of put a plan together and work hand in hand with the client. Um, my personal philosophy is, anybody gets a first meeting. I'm certainly not making people qualify net worth before they're sitting with me. The goal is always to leave people in a better place than when they came in. And so if we get to that point, and usually it's just a question of, can I actually add value? Are the strategies and the tools that I use right for you, and are they actually going to help? And if that is not the case, I'm really quick to be the first one to point out, to say, hey, the type of help that I offer is probably not what you need. But then we have other areas of Coast Capital that can serve those folks. So whether it's with my branch colleagues, I'm pointing because my branch is just over there. My branch colleagues, they're wonderful at helping folks with their daily banking needs, and sort of light investments and lending and that kind of stuff. And then we also have our advice center as well. So some people prefer to, deal over the phone. They don't want to come into a branch, and that's totally great. And so then they have access to that service as well. So we really do try to fit our services to what the client needs. And I think of part of my job is just directing traffic, making sure that people are getting to the right place that they need to be.
That's great to know, Isaac. So, what types of services do you offer as a financial planner?
hmm So my main focus is definitely asset and cash flow management, like we were talking about. So investment decisions, how much to invest, where to invest, what type of investments, when to take it out, etc. And that's usually through the lens of retirement plan. So either it's retirement in the near future, let's say maybe 5 to 10 years away, or in a lot of cases you are retired, but we know retirement is a journey; it's not a destination. And those first few years in retirement are actually quite a transition. That's something that I see a lot, is people, it takes time to getting used to being retired. So I provide a lot of advice around just the process of retirement, whether it's coming up or has already happened. And then the third area that I spend a lot of time in is estate planning. And so a lot of cases, the individuals I'm working with, they've sort of checked that bucket of, they're going to be okay, they have enough money, we don't have to worry about, you know, investing necessarily for their benefit, but now we get to look at investing for the benefit of their kids, or in a lot of cases, their grandkids, and how they can look at leaving a bigger legacy for their family. And then that's where the conversations get really interesting, because there's a lot of really neat strategies that we can start to use when that is the goal that someone is trying to accomplish.
That is great. Estate planning is very important. I'm a huge believer in that. They also
Definitely.
say that there are two things that you can't escape in the world: death and taxes.
Yes.
And
Yes.
yes. And so we shift now to taxes. Kelly, how important is it to do your taxes each year?
Very important. It's a requirement by the government, by the CRA, to do your taxes every year. I think sometimes it goes, people may choose to not do them every year. I think the penalty for not doing your taxes is a portion of the taxes owing. So for some people, if they don't believe they owe taxes, the penalty on that would be zero. So we have seen some people leave taxes from time to time. I think the challenge, especially as you enter your senior years, the challenge with that, I mean, it's multiple, it is a legal requirement to do your taxes. But the challenge with that is, some of the benefits are going to be based off of your taxable income that you receive as you go 65 and over. And so you really want to ensure that you're doing your taxes on time by April 30th of the year, and that you also are qualifying for all of the benefits that are available to you.
Yeah. So what is the impact if you fail to do your taxes each year?
So it's sort of multiple. So maybe I'll just kind of give a bit of a overview just for the benefit of what cascades, especially over the age of 65. So most people will be receiving their CPP and their OAS, which are both taxable. And so you may choose, when you sign up for your CPP and your OAS, for tax to be deducted at source. And if you don't, or if not enough is, you obviously will owe tax at the end. And in some cases, too much will have been deducted off, and then you'll get a refund. So you'll definitely want to make sure that you file to do. The other part is, which I'm not sure everyone's aware of, is the CRA typically, especially if most of your income comes from sources that the CRA is aware of, like CPP, OAS, or where they're receiving information from your bank or credit union, they already sort of know what your taxes are, so they will be charging you interest on any taxable amount that is owing. So do your taxes. Please come to the Senior Services Center if you'd like assistance with your taxes. Additionally, when you're 65 and over, in addition to your GST refunds that you would receive if you're within that income realm, home support services, so subsidized services for home support, care support as you age, are available to you. Rent subsidies may be available to you. And then for those that are lower income, the Guaranteed Income Support Supplement, the GIS, is also dependent on your taxes. So definitely want to be ensuring that you're filing every year, so there's no disruption to the amounts. I think the other thing that's really helpful is by doing your taxes every year and knowing, once you enter your decumulation of asset phase, you typically know with a bit more certainty how much you're going to get every year and what that looks like for you. And so being able to sort of look at what your taxes are earlier, being able to kind of make sure that you're in the right threshold given your tax bands is really important. And then people like Isaac can help you if you want to be pulling more income the next year or less income, especially I'd say when you're lower income, because so many benefits are dependent on your actual threshold. I think in BC, the median income for 65 and older is 37,000. So half of our seniors have 37,000 income or less. And the threshold for a single person for GIS is $21,624. I have it written down, I'm not in my head. And so if you are close to those thresholds, you'll want to sort of optimize strategies to stay within the bands. If you do qualify for GIS, you also qualify for things like subsidized bus pass. TELUS has a great program for internet, phone, and medical alert services at a significant discount. Handy Dart and Taxi Saver programs. So there's lots of additional programs that you qualify for when you are of lower income. So doing your taxes annually can confirm that you are and sustain those benefits every year.
Yeah. That's great news for those who are in the lower income. You've mentioned rent subsidy, bus passes, etc. Just to to make sure that we digest all of these benefits and credits for seniors. Could you repeat the highlights, like, the bigger benefits that they get, especially if they file their income tax every year and they're in the lower income? What are the benefits and credits for seniors?
So for lower income, depending on the threshold, everybody would receive the GST refund. Home support subsidies, like the safer subsidy, would be available depending on what your rent to your income level is. So your rent subsidies. If you qualify for GIS, you also qualify for bus pass, taxi saver handy dart, home support subsidies. So if you require home care. And there's other subsidies related to healthcare, such as prescriptions, et cetera. You also qualify for like public company programs like TELUS, internet phone, medical alert services. So for example, you get medical alert for $10 a month, where I think it's 45 or 50 a month for non-GIS income.
Okay. And so for those who have RRSPs, until what age can they contribute? And what happens afterwards?
So RSPs, you can contribute until the end of the year in which you turn 71. Is when you can contribute until. And then at that time, at the end of the year in which you turn age 71, your RSP does need to be converted into a RIF, retirement income fund. And the way I explain it to clients is essentially RSP is money going in, RIF is money coming out. Otherwise, they're very similar. They can hold the same investments generally. They're both taxable income. So some people know if you take out of your RSP, for example, that's taxable income. Exactly the same case with a RIF. The only major difference, and this is something I sort of alluded to earlier, is once you turn 71 and you have a RIF, there are minimum amounts of income that you have to take from your RIF each year. The minimum starts off fairly low. It's about 5.28%, I want to say. I'm looking at an old table here. Like Kelly, I don't have it memorized, and that's set by the government of Canada in the federal budget. But it goes up with age, and so as you age, once you're into your later 70s or early 80s, those RIF minimums actually do become fairly substantial, going up to 7, 8, 9%. And like I said, that's kind of where I alluded to that. You may be forced to take, say, 9% of your RIF, but you don't need it, or you don't need all of it, and you maybe have a portion left over that you want to do something else with.
Okay, and so can you reinvest that income?
Yeah, you can. So not within the RIF, but that's where a really powerful tool comes into play called the tax-free savings account. And unlike the RSP and the RIF, which have these fairly strict timelines, the TFSA you can hold forever. There's no age limit. I work with clients in their 90s. They still have a tax-free savings account. They get additional tax-free savings account room every single year, just like everybody else. And so that tax-free savings account becomes a really, really powerful tool for reinvesting your funds. And then it's also a really powerful estate planning tool as well, because you can name beneficiaries on it, and the beneficiaries will receive those proceeds tax-free as well. So it becomes a really, really handy tool. So every senior should have a tax-free savings account. It's a really, really handy tool.
Yeah, that is great. For both of you, what do you think is the best financial advice that you could give to a friend? Let's start with you, Isaac.
I'll keep it kind of focused on seniors. So if I was talking to a family member or someone in that sense, I think there's two things. Is number one, really try to align your assets to your values and your goals, and so it's really important that you know what's important to you, what you care about, what you want your retirement or your life to sort of look like, and then to really let the money kind of follow that. So don't let money dictate what's important to you. Let money be a tool that you use to accomplish what's important to you. And then the second piece is, I kind of bring it back to the estate planning a bit. It's amazing how many times how often the first time someone reads a will is after their family member has passed away, and then you have to interpret it. Whereas if you read it when they're with you, you can just ask them questions. You can get really clear on how exactly they want assets to be divided as well. So I'm also a big advocate of, hey, nobody likes to talk about their own passing. I totally get it. But the more that you think ahead and the more that you really communicate with your family and have a plan in place, it's just going to be such an easier and smoother transition for your loved ones. And so I really try to give an eye to the estate planning angle of things as well.
Yeah, thank you very much for that, Isaac. How about you, Kelly? What is the best financial advice that you could give to seniors?
Yeah, I think let's start. It's a great sort of investment way to put it. I never heard that before, so that's great. I think also just to echo on the estate planning side, et cetera, you typically also, as you age, you have the natural deterioration of health as we get older. And so there is actually a fairly significant connection between your financial positioning and the healthcare services that are available for you, especially in Canada. And so, similar to for estates and wills and other things that people typically don't do ahead of time is really keep their financial information available and easily shared. So thinking ahead about sort of your powers of attorney, who's going to be there to make your medical decisions, but also who's going to have access to your financial information if it's not specifically you. And so making so much of our healthcare is dependent upon our net income. And so what services are afforded to you at different stages. Obviously, if anything happens, healthcare takes care of you immediately. But as you need longer term care, that becomes a bigger focus. So really thinking ahead as to not just planning for yourself, but making sure that you have that information available to others and whomever else might need it. And so the other part, because so many of our seniors are lower income, and seniors of any income, you really want to be thoughtful about what are the bands of income that you're earning per year, how that may affect what other benefits and services you are currently receiving. And so, Isaac made mention before of clawback. So if you are receiving OAS over a certain income, it will start to get clawed back. And so you want to be thoughtful about what level of income you're at. And you can use tools like RSP contributions to reduce your taxable income, in which case would reduce the amount of clawback. The same is true, and there's a lot of really great resources online, if you can search online, about low income and how to manage low income, such low income taxes such that you can ensure that you can make the most. So as I mentioned, for a single person for GIS qualifications is income less than $21,624, which means if you have $21,625, you don't qualify. And so if you did, a $2 contribution to an RSP with Isaac, you could qualify for a lot more benefits. So you want to be mindful of what those thresholds are and employ different strategies to ensure that you can continue those services for as long as possible. And then, at what year you would actually pull in your RSPs, if you do have extra income, what vehicle you're leveraging, and then what that would mean for subsequent. Because as Isaac mentioned, once you pull it out of your RSP, it is taxed, which means it also does increase your threshold of taxable income for all of the metrics. So that's those types of strategies that you want to be thoughtful of. And we don't do tax planning at the Seniors Society, but we do help you to file your taxes and make sure you have the information so you can have those conversations with someone at Coast Capital or Isaac directly to be just more mindful of how to just really get the most of all the programs that are available to you.
Oh, yeah, that's very helpful. Is there anything else you'd like to add, Isaac and Kelly, to help the seniors in their finances and taxation?
Yeah, I got two things that come to mind. I think the first one, and both of these were triggered by thoughts that Kelly was sharing. So thank you for that. Number one is the professionals that you have in your network. Whether it's your accountant or your attorney or your real estate agent or your financial planner, your investment advisor, whatever the case might be, they are happy to talk to each other in order to help you. So I have several of my clients where I speak with their accountants at least annually, if not semi-annually. I help make sure that their accountants have all the information that they need, all the slips, so that there's no surprises. And that just makes everybody's job a little bit easier, and it allows the help that we offer to be that much more effective. So definitely, I encourage people to let their professional network sort of communicate with one another. And obviously, we can't do that without your express permission. We can't share information about clients unless we have your permission. So yes, your professionals in your network should be very happy to work with one another in order to give you the best possible advice. And then the other thing is, and Kelly kind of mentioned this, healthcare and just the cost of living. I mean, we've gone 25 minutes without mentioning the I word, inflation, which is, definitely a hot topic lately. All this is to say, investing isn't just for young people. Investing is for everybody at any age. Now, it's going to look a little different for people based on your age, based on your personal circumstances, but you're never too old to plan ahead and to think about what life might look like 5, 10, 15 years out. What I always say is when we have the benefit of time and preparation, there's a lot that we can do. But if you're in your mid 80s and you run out of money, I mean, there's very little we can do at that point. Our options are pretty limited as far as investing is concerned. So never too old to invest. It's also never too late to start. And make sure that you have a team of people that are helping you and that they can communicate, and it's all in your best interest in making sure that you're going to be looked after.
That's great. Very helpful information and advice. Thank you so much, Isaac. How about you, Kelly?
Yeah, that's great. I'll bring it back again to taxes. So when you think about sort of your taxes and just how you naturally, because we all naturally age, there are a couple of things that are available to us through taxes. So there are caregiver benefits. There's also, at all ages, there's the health expense, which we typically don't max out early in life, but paying attention to how much you're paying and keeping your receipts for all of your medical bills. The other piece that they've introduced recently is the ability to deduct off home enhancements. So if you're putting in taking out your tub and putting in a walk-in shower, if you're changing your flooring in your home, it's actually fairly broad what actually qualifies. Changing your toilet to be a higher accessible toilet, all of those expenses you can claim on your taxes as well. The other thing to keep in mind is there's also what's called a disability tax credit. And so that is for people who have challenges with the activities of daily living or multiple challenges of their IADLs. And so you do need to go to the doctor, and they likely will charge you for that visit to fill in the form. But I guarantee you, because you at a minimum are paying tax on your CPP and your OAS, you will recover more in your tax savings than it would cost you to do the outlay of the form to get your disability tax credit, assuming you qualify. And if you don't, the way I think about it is I don't qualify today, but at some point in the future, I will qualify as I age and our bodies just have the natural breakdown that they do. And so just something else to keep in mind, because those things do make a significant difference. So just another thing to be mindful of. And I've done a lot of work with high net worth people, and it's those types of things that are always thought of. And so just want to make sure that everyone's really thoughtful of, making sure they can claim and do all the things that they are entitled to.
Wow.
And that tax credit,
yes,
sorry if I can jump in, that tax credit is also retroactive as well. So let's say that you only qualify. So you go to the doctor, you fill out the form, you get qualified. The CRA gives you your notice of determination in 2024. But let's say it's an impairment you've been dealing with since 2016. It's entirely possible that you'll be qualified retroactively back to 2016. And then this is a Kelly question, but it's fairly simple at that point to refile your taxes and get that tax credit that you would have been entitled to for all those years. So for some people, it can actually be a pretty substantial inflow of cash if they should have qualified a lot sooner.
Yeah, that's a great point. You can go back 10 years, I believe. So it can be substantial.
Yeah, 10 years. Yeah,
that's very helpful. Where can they get in touch with you, Kelly?
So I volunteer at the Senior Society. I'm one of many volunteers in our tax clinic. And as I mentioned, we don't do tax planning, but we can definitely point you to the right information. And then there are tons of services in the credit union system, Coast Capital being a great advocate for what they offer to help you to be able to navigate what that means. But we're there to help you be able to file your taxes so you have the information to take those next steps.
Thank you so much. How about you, Isaac? Where can they get in touch with you?
Definitely. Well, if you're a Chilliwack local, you can come to the local Coast Capital, and I'm happy to sit and chat with you. If you're somewhere else, anywhere there's a Coast Capital, there's someone like me in the office that can have these conversations with you. So we have 56 odd branches, so any one of those we're happy to serve.
Thank you so much to you, Kelly and Isaac. This has been very insightful. We've covered a lot today. And so, to our listeners out there, if you want to know more, you can reach out to Kelly or Isaac. And of course, listen carefully again to this podcast, Fridays with Seniors, on the Peter Legge Podcast. You can also leave your comments on the podcast. And please don't forget to share this. This is streamed on Apple Podcasts, Spotify, and YouTube, and wherever you get your favorite podcast. Until next time, this has been Shari Hineri-Elon, filling in for Peter. And thank you once again, Isaac Vineman and Kelly Latzel. This podcast is brought to you by Coast Capital Savings Credit Union.